It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter on moving average crossovers. In this episode, we review the concept of moving averages, examine the differences between simple and exponential moving averages, and then look at how moving average crossovers can provide reliable buy and sell signals. Let's begin. First, a review on moving averages. A moving average uses a certain number of days closing prices to determine an average price. A 10-day moving average would thus use the previous 10 days closing prices. The average would always use the most recent 10 days worth of data, so each time a new day passed, the oldest day from the data set would be dropped from the moving average. This is what makes it a moving average. Popular moving averages include the 10-day, the 30-day, the 50-day, and the 200-day. Remember that moving averages only count trading days, so a 10-day moving average would be a 2-week trading average, and a 200-day moving average would roughly be a 1-year moving average. Here's an example of a simple moving average calculation. In the left column, we have 5 days worth of prices, starting on Monday when the stock closed at $10 and working through the week with subsequent closing prices of $11, $10, $9, and $8. The stock's 5-day moving average is thus $9.60, which is the average closing price of those 5 days. Now in the right column, we've added a new day, the following Monday, where the stock once again closed at $8. The previous Monday, when the stock closed at $10, has been dropped off the data set, and the new 5-day moving average is now $9.20. Here is how a 50-day simple moving average is plotted on a chart. The blue line connects points that represent what the moving average was on that particular day. Rather than viewing a raw number, it's better to see the progression and trend of the moving average. This is also vital for spotting crossovers, which we'll deal with soon. Another kind of moving average is the exponential moving average, or EMA. This kind of moving average gives greater weight to the more recent days in the data set. Some people prefer SMAs, or simple moving averages. Others prefer EMAs. That's really not the focus of this episode, though, which is moving average crossovers. The only important thing is that you use the same type of moving average when looking for crossovers. It wouldn't make sense to use a 10-day EMA and a 50-day SMA, for example. Now I've changed the chart to show a 10-day moving average in blue and a 30-day moving average line in red. The rule of moving average crossovers is that it's bullish when the shorter moving average crosses and moves above the longer one, and vice versa. As you can see from the green buy points and red sell points, this is a very effective indicator. In conclusion, one thing that is important to acknowledge is that moving average crossovers can be used for short-term, long-term, or intermediate-term trading. The longer the moving average is, the longer term the signal. In the example from the previous slide, we were using 10 and 30-day moving averages, which is a relatively short term, compared to if we were using 50 and 200-day moving averages, for example. It also might be a good idea to set a profit target and take half your position off the table at that point, and then close out the remainder of your position when you get a definitive sell signal. The reason is that by the time there's a moving average crossover, the trend has already begun to change. And of course, like all other indicators, you'll get maximum benefit from using moving average crossovers if you use them in conjunction with other technical tools. We hope you've enjoyed this TradingTips.com video newsletter on moving average crossovers. Thank you for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit TradingTips.com. Sign up for our free video newsletters. Become a successful trader by visiting TradingTips.com.